Juan Delgado Moreira is a co-CEO at Hamilton Lane with at least $950 billion of assets under management. Juan, it's great to have you on. Thank you very much for coming in today. So can we start with the Evergreen funds and how they're supposed to be a bright spot? I mean, it's really basically investing, redeploying, so never really seeing it in my hands.
Well, thank you for having me, and nice kickoff. I think what you're having, if you take a step back, is more participants in the industry want to have choice, and they want to have access to private markets. So Evergreen may not be the best word, we can find another label for it over time, just offers the opportunity for more types of investors to have access to that. It's more efficient, you can invest and get your 100% of the capital invested up front, and it just compounds. So it reinvests, but it offers you also partial liquidity. So if you want to put your hands into it, you can get some liquidity. You have to wait.
Do you think it will gain traction despite the whole tariff war and a lot of uncertainty? Do you think investors will go for that? I mean, you were just talking about fundraising is down. I mean, exits will be even harder.
Exits have been a challenge. I mean, if you ask me, take a step back, hey Juan, what's the most important topic in private markets today? I think it would be liquidity, no question. In part because it comes on the back of 2 years of low liquidity in 24 and 23. And in part because if you compare it to long run periods of time, a lot of investors were banking on reinvesting that. However, liquidity was not zero in 2024. So picture a year where 24% is the average, 2024 ended up at 15%. So that's the backdrop of liquidity. The reason to access this is really returns. We had lots going on, you guys are busy, and the environment is challenging. And in this environment, you go back to people want choice. And one of the largest asset classes that have been not as accessible as others was private markets. So with that premise in mind, you have diversification, you have lower volatility, and you have access to more mid-market companies that are profitable that frankly the public markets are not giving you.
Private markets giving the retail investors the public access, that has been really the chatter. Why do we need to do that? Why does the private market industry feel the need to really share all these good investment opportunities with the retail cohort?
I would say it's a pull and push. I think the industry has been growing steadily, mostly on an institutional basis, and I think the private markets have done very well, as you mentioned earlier. 20 of the last 20 years in private credit, 20 of the last 22 in equity. Growth in infrastructure, real assets, really broadening the landscape of what can be. So today, private markets is really about many different types of asset classes. And so that depth and that breadth is what enables the asset class to create structures that are more available, have a bit more liquidity, lower minimum access points. But I'd say you have to look at the pull factor. Investors have a lot of choices. They've been into digital assets. They've been the public markets are more concentrated and in many ways offer them less choices. You know, where do you go if you want to do emerging markets equities? Where do you go? You want to do small cap profitable companies. How do you get innovation? These are the challenges that the investors are facing. And they're coming to private markets to get answers for all of that. They're seeing huge rounds of valuations in the private world that they simply cannot have access to, including many, many brands that they know intimately, right? So the familiarity is up here, the access was down here, the pull factor is a big component of this.
And on top of this so-called democratization of private markets, because some of these pension funds are, of course, exposed to private markets, I think some of these major markets like the US, UK, and also Australia, they're talking about regulating the private markets in terms of at least disclosures and valuation, etc. I mean, we were just talking to a guest from Host Plus, one of the largest super annuation funds in Australia as well. Do you see the need for it? And not that your investments would need some vetting, but do you see the industry needs some kind of checks and balances here?
The industry has been regulated for a while and welcomes checks and balances and should have more, no question. I think pension is a big type of investor into the asset class. You also mentioned to some extent a number of countries at different stages of their development. Australia has a leading practice in the superannuation world, which is ahead of what you can do if you're a US saver with your 401k. So you have a level of development in Asia Pacific that is actually leading the world, even ahead of the UK. So not the same regulatory environment, not the same regulator, and not the same stage of development of pensions specifically. But generally speaking, we've always put Hamilton Lane on the camp of bring it on, more regulation, more transparency, more data, more tech. We believe absolutely that that's a good driver that will only make the asset class stronger. And we've been actually helping and opening to that. But again, I think sometimes when you cover pension, it's very easy to look at the world and consider, for example, the US market in the defined contribution being the most developed. That's not the case, and I think Australia, your correspondent there, is really leading the pack on that respect.
Okay. Talk to us about your tokenized funds, because every time I hear tokenization, I feel like I'm lost.
Oh,
try me.
I thought you were going to say you hear Hamilton Lane. No, it is quite straightforward. You have real world assets that find their way. They get transferred into a digital token, and that is more tradable, more accessible, more transparent, and more liquid. And that is favored, frankly, and really liked by a lot of your friends and my children and younger investors who've arrived at this market in a world that it was essentially different from the world that Mr. Buffett started investing in. So that's your demand, that's your public. The technology has been tried and tested for a long time. And we, Hamilton Lane, have been early movers. We've tokenized over 7 of our funds. I can't go into specifics, but you've covered that and they are out there. And they play a role. So they reduce the access, the size. They are on your phone, which I think is what everyone expects today for any investment. Therefore, you can check monthly, increasingly will be daily valuations, and you have a certain level of transparency. That proximity, get your hands into them, as you said earlier, is really important for the future of investing in private markets, I think.
So what should be the takeaway from, okay, me on my mobile, if I wanted to invest in your tokenization funds, tokenized funds, what is really am I getting diversification from?
I think you have to go back to, now that we've talked about the technology for your viewers, now go back to fundamentals. Why are you investing in Hamilton Lane? Or why are you investing in private markets? The technology itself doesn't make a product, doesn't make the investment case. So we would go back to the way you started the interview. What is private markets giving us in this environment? We think it's giving you diversification. We think it's giving you long-term returns. And you just have a different access point than you used to have when you needed to be an institution, have $5 million minimum, and you needed a lot of capital in 10 years, and capital was going to be called over time. Very institutional paper. My co-CEO, Eddie Hirsch, compares that to writing a check at the cashier leaving a US supermarket, right? We've never done that in Asia, but believe me, you can still see it in the US if you go there. So the technology doesn't make the investment case, but it helps the access point.
When you find the next investment targets, I know that you guys are long-term, 5 years, even sometimes at 10 years as well. Do you feel like what happened in April 2025, or what's been happening in the lead up to that, is something very structural, that it could actually impact your long-term investment horizons and views and target companies as well?
I like the way you spoke about April in the past. This also felt to me like the longest April ever.
Yes.
We do believe that there's some fundamental shifts in the last few months that affect investing long term for public or private equities. Dollar strength has been on the program today. I think it's a key topic that has a long run. A more transactional global environment, a more decoupled set of leading economies, redrawing of logistics maps. Those are longer run trends that you have to take a view on. And fundamentally, of course, that affects private markets. But the connection that you see sometimes between that and an existential crisis of private markets is incorrect. That's just not the case. But then going back into one level deeper, you're going to be in an environment now where you're looking for quality. And you're looking for quality in real assets, largest participant, private infrastructure, real estate, private markets. You're looking for quality in equity, looking for robust growth, profitable companies. What's the percentage of profitable companies in the Russell 2000? I don't have 40% of underperforming companies. So private markets is providing access pools of investments in your equity, in your credit, and in your real assets. And the same theme, I think, will be quality-oriented.
Juan, it's great to talk to you today. Great conversation. That was Juan Delgado Moreira from Hamilton Lane.